Yo, what's good everybody? It's Caden. Today I'm breaking down a clean bearish trade from Friday around noon, and this was pure cycle confluence and quarterly theory, no extra nonsense. This was a textbook example of reading the market with the algorithm. No guessing, no indicators, just timing and logic. Going on Friday, daily cycles could not show any bullish quarterly S&T. It's not possible. Every previous day low has been rated, so there's no possible way to get any bullish quarterly SMT. And expecting to get any bearish quarterly SMT at this time was a little bit of a far fetch. It's 12 p.m. on a Friday, and the highs are all the way up here, and there's no news, and the government is shut down. But look here, at around 10 a.m., price started to reject off of the previous day equilibrium zone. So we can think of the previous day equilibrium as a reversal zone if price wants to reverse. Now I'm not saying that this is the only reason why I was bearish for this trade, but this had a big impact on the reason why I was bearish. But yeah, having the equilibrium, that's key. And if you look, Russell was basically already in a sell program, nowhere near the equilibrium while all these were rejecting. It was already in a sell program, already selling off. To me, that's the market saying we're shifting bearish. Once we get our daily confirmation, we then break it down to the session cycle. Now for these sessions, think of it as like the New York AM session from 6 to 12, 12 to 6 for New York PM session. Then you got your Asian close, New York or EU open, EU close. Think of it like that, right? Now because we're trading futures, we will be only worrying about the 12 to 6 or the 6 to 12 and the 12 to 6. So like I said, once I seen price rejecting off the previous day equilibrium zone around 10, 11, 12, I then waited for the 12 p.m. new session cycle to open up to present myself new bearish S&T if possible. So at the new session cycle open, we have bearish quarterly S&T as you guys can see on screen now. Let me mark it out for you guys. So what do you guys see here? NQ is our manipulator asset. ES, YM, and Russell are all our failure swing assets. You can kind of count YM as a manipulation because it's literally the same exact price. Just think of it like this: it technically never went over, but it's like right there, so it technically did take it. But we're gonna have it as a failure swing in this aspect. Our manipulation is NQ. So right around 12:15, once we started getting our manipulation, if you look at Russell, what's going on again? We're in our sell program already, and the premium of the previous session cycle as well. So once we get this right, it's very quick, quick. We break it down to the 90-minute cycles. And if you look right now, you guys can already see our manipulation assets and our failure swing assets, right? So boom, as you guys can see, we have 3 manipulation assets and 1 failure swing. What's our 1 failure swing? The one that's been in the sell program this whole time. Everybody else is falling behind, don't know what to do. They can manipulate again. Russell already in the sell program. We're already looking. If we look right now, we are in the premium of the previous M90 cycle, also in the premium of the session cycle, but we're in the discount of the daily cycle. But like I said, we're rejecting off the equilibrium of every single asset. So with all those 3 aligned, we have a bias. Our bias is clear, and I'm only looking for a short, and so should you. With all cycles leaning to be bearish, I wait for a structure to confirm. The market will always show its hand. You just have to wait. And that's exactly what I did. As soon as I seen this 12:15 candle hit and that manipulation, I broke it down to the 1-minute time frame. So the first thing I'm looking for on the 1-minute time frame is a fair value gap plus a market structure break, right? Once I get those 2 things, that's my cue to execute. Now this is what I'm doing as soon as I get down to the 1 minute. With all the other 3 assets manipulating at the current moment, I'm not paying attention to it, only Russell. So if we grab our rectangle here, we can go ahead and draw out this fair value gap. What did I say that is needed? A fair value gap plus a market structure break after quarterly SMT. And what do we have? We have quarterly SMT with the fair value gap and a market structure break. Now, not every fair value gap is going to be the correct fair value gap. And there's a reason why I took this exact fair value gap, and that stays inside the mentorship. Anyways, so since we have our quarterly SMT with a fair value gap and a market structure break, this is our main fair value gap that I'm looking for after the mentorship logic is implemented into the chart. So this is my trade that I took. Like I said, I entered right at the 1228 candle after the confirmed market structure break. And once everything else aligned within the mentorship and the mentorship logic, I then hit enter, and then we let the price do its thing. So I'm gonna play this with you guys for a second. We're gonna go just forward by one candle at a time. Boom, partials hit. That's if you want to take a partial zone, you'll see this every single time you take a trade with the mentorship. You're always gonna have your take profit, and you're gonna have areas where potential partials and places where you want to break even and potential reversal points. So our first partial is a point of area where price may reverse if it taps it and goes right back up, right? So I took a partial there, no break even yet, sticking to my rules. We come down, we break it again, boom, we hit the second partials. That's our break even zone. So at this point, I am break even at this point, nothing. Second partial, break even, and then we play it again, keep coming, boom, full TP, right at 12:44, so less than 20 minutes in the trade, and you get 1 to 2 R, basically 1.96 R, I believe it was, something like that right here. That's the full trade, in and out just like that. One position, partial at 2 levels, and a full take profit. No emotion, no stress, just flow. Trading isn't about calling tops or bottom. It's about reading cycles and knowing when the market is aligned. That's exactly what I did here. Pure timing and pure structure. Everything I share publicly helps you see the market clearer. Deeper algorithmic logic that stays inside the mentorship. As always, guys, if this breakdown gave you value, make sure to subscribe, hit that like button, and maybe even share it with some of your friends. We've got more content coming: market psychology, cycle theory, and structure breakdowns. I appreciate you for watching, and I'll catch you guys in the next one.